In this video, I will be breaking down my 1 to 3 risk to reward gold trade that I took on Tuesday. As you know, we as retail traders, we do not move the market. The big corporations and institutions, they are the one with the large capital that can make price fluctuate in a certain direction. We can only identify where they came from and where they are going in the future by market structure. So let me give you an example. Say price is in the uptrend formed by higher highs and higher lows. We can simply identify that they want to keep pushing this price to the upside, and we are just going to look for areas usually on the pullbacks that we can get in the hope that they're still going to keep pushing the price to the upside. So there's this guy on YouTube that I like to follow to get my information about what the institutions are doing. His name is Trader Nick, as you can see right here. He has a software that shows every purchase of the institution. So what they are doing, what are their outlook on a certain pair, in this case gold. And he was explaining to me that the institutions, they are looking to buy gold, or they already bought a lot of gold and they are keep going to buy more and more and more gold. So even though this wasn't a plus setup or a setup that I would normally take, because of the information that I had that the institutions were keep buying gold and wanting to push gold higher and higher, this gave me a confluence that the price of gold may indeed want to go higher. Even though when you see this big wick, that price came to the upside, got rejected and got pushed down, people will normally say, okay, I see this big wick, that means price is probably ready for a reversal. And because we first had a big movement, this big movement all the way to the upside, followed by this rejection, people will normally say, okay, there is possibly a reversal coming and I will be looking for shorts. But because of the information I got from Trader Nick, where he explains that the institution want to keep pushing the price of gold higher and higher, he showed the previous purchases and the purchase that is likely going to happen in the future. So with this setup, I did not risk 1%. I went with a 0.5% because it isn't a A+ setup, but it had the probabilities of playing out. So as you know, we always start on the daily time frame. As you can see right here, we had this green impulse candle followed by 2 retracement candles of the same color. Then we go to the weekly time frame. On the weekly time frame, it was looking like this. So as you can see right here, we also had a rejection candle right here on the weekly. So people would normally get scared, but I was just only risking a 0.5% and I had the information like I previously explained. Price had came from this level at a big impulse. Normally you would expect a correction, then followed by a new impulse. So let's draw out our areas. You can see this previous level of resistance got broken and turned into support. So price came up, got rejected to the downside, got rejected again to the upside, to the downside, then broke it with strong bullish momentum. You would normally expect a pullback and then a continuation somewhere around this level. But as you can see, the weekly is also bullish and the daily is also bullish. So now we go to the daily, and on the daily, we will draw our Fibonacci in the opposite direction of the impulse. This is because we're going to measure the distance of the new impulse. So let's draw our Fibonacci in the opposite direction of the correction Then we go to the 4-hour, and on the 4-hour, we will wait for price to break the 61 level. That will be our entry after price break the 61 level, followed by a retracement that will tap us in when we set our limit orders, and then we can ride the price all the way up to the TP. That will be the negative 27. So right now we're just chilling and we're waiting for price to break the 61 level. As you can see right here, sometimes you will have people that are just trigger happy and they will enter right here and then get regrets when they see price is retracing. So that's why we just have to stay disciplined and wait until price breaks the 61, because that will be the ultimate confirmation that our setup has taken place. So we just wait, and now you can see we had a clear break of the 61 level, a big green candle breaking. So then we set our limit order on the 61 level. Let's take our long tool right here. Our stop loss will be at the 88, or you can just put it slightly below the 88 for some breathing room. And our TP will be the negative 27. Just make sure it is a 1 to 3 at all time. So right here, you can see price has stepped us into the trade. Now, this is the exact reason why you should not babysit your trades. Because if you see this, and it was already not a A+ setup, and price came all the way down here, almost going to your stop loss, you might have got discouraged and closed the trade. But as you can see right here, you just leave it. Price went back up, broke the 38 level, and we know this is a level of where when it gets broken and close above, we put our stop loss to break even. So in this case, the trade is now risk-free. As you can see, let's play it out some more. As you can see right here, this was the close of Thursday night, and the markets are closed today on Friday because of the holiday. So this is where you would then exit the trade, or you can just hold it, or then you have all the swaps of Friday, then you have the weekend also. So logically, you will just close right here and just go enjoy your holiday and the rest of your weekend. So this was the breakdown of the 1 to 3 risk to reward trade of gold. I hope y'all enjoyed this breakdown. Stay tuned for more breakdowns. Appreciate y'all. Peace.